What's going on, guys, and welcome back to another video. So today, with it being a Friday, we're going to do my Trading212 Portfolio update. We'll have a look at how my overall portfolio currently is performing this week. We'll have a look at some stocks that I bought and also my plans going forward. And with all that being said, let's dive right on over to Trading212. So at the moment we have about €8,661 invested, as we can see on the left here. We're up €1,261 or 17.05%. We can see here we also have €100 in free funds, but the €8,661 translates, if I just check my phone, about 10,360 USD, or for my UK viewers it's about £7,500. So if we look at the overall 1 week chart, we can see this time last week we were sitting at about 16.59% or €1,227 in profit. And over the week it's been fairly stable. It had a few ups and downs, but again, as a blue chip kind of portfolio, there isn't a whole lot of change. And we can see it had a dip as well on Wednesday and Thursday, but today it's after coming up again and we're back to 17% in the green. So I didn't invest any further capital this week. Last week we invested about €300 or so into dollar cost average into HighTide, iShares Global Clean Energy ETF and Tesla. We'll see now that currently it stands, there is 29 of the 31 holdings now in the green. So I'm quite happy with how the overall portfolio is doing. Again, Tesla, what we dollar cost averaging over the last few weeks, is back up to about 4 or 5% in the green. So I'm very happy there to get in at a cheaper price, and we're nearly at the full share there as well. But as we'll see now later on in the video when we look through my portfolio pies, the two stocks / ETFs that are now in the red are down considerably, so we'll discuss my plans going forward for them as well. First up this week we have my communication services pie, which we have over €600 invested and are up 32%. So over the next few weeks I'd like to get this pie up to at least €1,000 in value. We have two holdings here at the moment in the form of Walt Disney, which is up 45.9%, and Facebook, which is up 20.9%. Now again, we don't have a whole lot invested into each of these two stocks, mainly because they did go up in value fairly fast after buying, but hopefully in the long term, if they do start to dip a small bit in value, we'll have a cash reserve ready to take advantage of this. Consumer discretionary, we have over €1,400 invested, and we can see here up 6.3%. Now I'm happy again that Tesla, that we discussed earlier, over the last few weeks wasn't doing too well. Even up to about a month ago or even 3 weeks ago, it was down over 20%. So to have a complete turnaround and a 25% difference overall over the last 3 weeks, I'm very happy to have got in at a cheaper price by dollar cost averaging. And we can see the kind of fruits of that now, where it's up 4.3%. We have McDonald's up over 10%, and Nike is pretty much break even. It's down about 0.3% at the moment. But over the next few days, I'll keep an eye on Nike. And if it does drop down, let's say 2 or 3%, I'll be sure to load up more there. In consumer staples, it's another pie that we've hit over the 1,000 mark. We currently have €1,280 invested and are up 8.3%. We have 3 holdings here and they're all relatively safe blue chip companies. Coca-Cola is up 10.5%, PepsiCo up 8.7%, and P&G is up 5.8%. Again, there's nothing kind of spectacular here, but there are definitely 3 stable companies that are very good to have in anyone's long-term portfolio. Then have my energy pie, which we have over €570 invested, up 8.7% overall. I will start with the positives here. The two kind of old school energy stocks in the form of ExxonMobil and Chevron. ExxonMobil is up over 65% and Chevron is up over 41%. Now this kind of shows the importance of diversification, firstly across different sectors, but even inside sectors alone, there's a lot of subsectors. For example, here we can see the polar opposite of these Chevron and ExxonMobil's in the form of clean energy. We have an iShares Global Clean Energy ETF, which I made many detailed videos on at the moment. Now, I have been dollar cost averaging in here as well a lot over the last few weeks. And again, kind of just not go into detail again because it's in the description below. But the 2 main reasons why this ETF is down is because of the top position, Plug Power, has had financial errors, or fund accounting errors should I say, which obviously had a huge impact on their overall price. And second of all, the kind of overall clean energy style sectors have been on a dip as of late from the high of when Biden became the president of the US. So again, there has been a bit of a sell-off here and consolidation, but I'm quite happy to hold this long term. Now again, I have been buying a lot of this ETF, again only 1 or 2 shares here and there, but consistently over the last few weeks. And I have said in my last video that I am going to have a bit of a cool-off period in terms of this ETF. I'm going to leave it stand for a week or so and just see where it goes. If it goes down further in value, well and good, I'll be getting it at an even cheaper cost. And if it goes up in value, well and good as well. It's kind of a win-win situation either way. If it goes back up in value, we're kind of going back into the profit. If it goes down in value, we just get to go in at a cheaper stock price. So overall, it's kind of a win-win if we leave it cool off for a few weeks. We then have my two main ETFs that kind of are the backbone of this overall portfolio. Again, I stated in prior videos that I want to have roughly about 10% of my overall capital in ETFs. And we kind of have two of the most popular here in the form of the Vanguard S&P 500, which tracks the top 500 stocks in the US, is up 23.9% at the moment, so I'm very happy with that. And second of all, we have the Ftse 100, which is the top 100 companies within the UK, up 18.2% as well. So there's not a lot to really say here, as much really. They're doing quite well, but again, they're kind of just these safe, kind of stable ETFs that will do well in the long term. We then have my financial pie, which we have 1,600 or 1,160 euro invested, should I say, and are up 35.5%. I'm very happy with how this overall pie is doing, and I'm quite surprised, I must say, as again, these are 5 very kind of stable blue chip financial companies. We have Visa and MasterCard up about 14% and 19.5% respectively. And then the bottom 3 here, I think it's mainly due to luck and when we actually bought in. At the original crash, JP Morgan and Chase is up 55%, Bank of America up 58%, and then we have Goldman Sachs, which has broken the 70% mark. So that's probably one of my best performing stocks at the moment. But overall, this financial sector, because they're all doing quite well, it's very hard to find a means to dollar cost average in here. But nonetheless, I'm very happy with how this pie is doing. We then have my healthcare pie up 11.6%, and we have over 880 euro invested. 3 stocks here again. Again, like some of these other pies, they're not really relatively interesting. They're kind of more stable stocks, which over the long term will do very well. Johnson & Johnson is up 10.7%, AbbVie up 23.6%, and Pfizer is up 6.7%. One of my smaller pies is the industrial sector. We only have 287 euro invested here and are up 23.9%. Now, the main reason that I stated before of why we don't have more capital here is because the second I bought, or even a day or two after, these stocks went up fairly well in value, which again is nothing to complain about. But that's kind of the reason why it's a low amount at the moment. But certainly if any of these 3 drop into the red again, I'll be loading up. We have 3M up nearly 20%, Caterpillar up nearly 50%, so I'm very surprised with that one as well. And Waste Management is up over 20%. The next 3 pies, firstly we have the materials. Now I still don't have a holding here. I'm still kind of looking for one that takes my fancy. I'm fairly picky when it comes to adding new stocks to this overall portfolio, so bear with me. So over the next week or so, I would like to have a position within the materials pie. So as of now, we have nothing. Now we also have the penny stock pie. We have about 200 and odd shares in HighTide, which is doing very poorly at the moment, I must say. And again, I'm very surprised, because I have a lot of detailed videos, which I link in the description below, of this overall penny stock doing very well fundamentally and has so many catalysts going forward. Again, the main reason why this substantial dip, and again for penny stocks, this has to be taken both ups and downs, very volatile stocks, but it's currently down 26.7%, and the main reason for that is the news of dilution of shares. So again, I'll probably make a more in-depth video on that when I do some research, but that's probably the main reason why it's down about 26% at the moment. Now, this poses a great opportunity to dollar cost average in my opinion. Again, I'm not a financial advisor, but that's just my own opinion. And I probably will be buying a lot more, or even doubling my overall position here to up to about 500 shares if I put in a further 100 euro. And that would effectively really cut down my average cost as well. But again, I'll make probably a more in-depth video on this over the weekend if you're interested. We then have my real estate pie. We only have the one stock here in the form of Realty Income. It's up 13.6%. Again, not much to write home about here. We only have about 66 euro invested. And that's mainly because it has went up in value since we bought. So one of the main premises of investing on this channel is dollar cost average, and only invest further into stocks if they're in the red. We then have over 1,400 euro invested in my tech pie, and we're up 26%. 5 holdings here as well. And again, I don't really want to have more than 5 holdings within any of these pies. We have Microsoft up 24%, Amazon up 9.5%, Apple up 21%, Alphabet is up 56.5%. I'm very happy with that one as well. And IBM, which was hovering around parity over the last few weeks, is now up 12%. And we have nothing in the utility sector pie at the moment. So that's how my portfolio is doing this week. Again, just to kind of recap, we're up about 1,258 or 60 euro and up 17% overall. I'm very happy with how it's going, as 29 of the 31 stocks / ETFs are currently in the green. So in terms of the 2 that are in the red, which currently are the iShares Global Clean Energy down about 9% or so, and also HighTide, which is down over 25%. I'm going to leave them for a week or so, again just as a cooling off period, just to see where they're going. Again, as I mentioned in this video, if they go down in value further, that's even better for me because I can get in at a cheaper price as I will be a long-term investor. Or second of all, if they go back up in price again, that's not bad either, I suppose, because it's bringing me back into the green. So that's my plan for the 2 stocks / ETFs that are in the red at the moment. Now also, I was thinking about taking profits from some of my other stocks. For example, some of my energy or financials are up 50, 60 and even 70% each. So what I'm actually going to start doing now, instead of selling them out completely, I'm going to look at the 1 week and even 1 month charts. Again, I'll probably make a bit of more detailed video on this going forward on how I'm going to do it. But again, to dollar cost average, I'll be doing dollar cost averaging over, like, let's say a 3-month period instead of their entirety. So that way, I'll still be buying into stocks that I already own, and I will be buying in further even if they're in the green. Again, if they're down in their, let's say their 1 month or 3 month charts, I will be buying more there as well. But again, I'll go into more of an in-depth video on that down the line. So that's just a brief update on how my overall portfolio is currently performing. Again, we haven't bought in any brand new shares in there at the moment, but I'm happy with how it's performing. If you found this video anyway interesting or entertaining, it'd be much appreciated as always if you could smash that like button, and if you're new around here, if you consider subscribing, I'd be really appreciating that as well. And finally, if you have any questions, comments, queries or suggestions, please don't hesitate to comment below and I'll be sure to get back to you as quick as I can. Thanks very much for watching, and I will see y'all in tomorrow's video.